Meanwhile, German Finance Minister Wolfgang Schäuble says the goal is to make it very clear that European banks are stable, and wherever there are problems, there have to be consequences. Well, he says the stress test won't create disturbances, but rather clarity, and believes help should be ready if banks aren't capable of getting more capital or reducing balance sheets. Right, well, for more on this, we're now joined, and this is also ahead of her speech at the annual International Banking in London. We're joined by Angela Knight in our studio in London. She's the Chief Executive of the British Bankers Association. Angela, thank you so much for being on the show. Now, there's so much concern, actually, that the change in language here in Brussels means that it will put a lot of the banks in a very difficult situation, because they had to go to the market to ask for refunding or recapitalization if they fail the stress test, which means they'll be even more vulnerable.
Well, good morning. And actually, your point is correct that the stress testing of banks across Europe will mean that where new capital is required, those banks will have to get it by one route or another. I think, though, that it's absolutely vital the stress testing is done, because there's been some particular concerns in the Eurozone area as to whether the banks do have the capital they need. And in the UK, of course, we know how uncomfortable it is, because we went through the stress testing arrangements ourselves, nearly 2 years ago now, and of course we've been under constant stress tests since. I don't think, though, that we should remotely believe that all the banks that need new capital will not be able to raise it. That is manifestly not the case. But as the your Dutch guest quite rightly said, transparency is important, because otherwise the markets will simply not believe the outcome. We require stability across Europe, and that means that where those stress tests have not yet been properly done, they need to be concluded, and the results do need to be known.
Now, Angela Knight, Bloomberg also understands that actually in terms of the Basel Agreement, it seems to be a little bit more lenient for the banks overall, the UK banks, the European banks. Would you welcome this?
Yes, I think that as far as Basel is concerned, which is, if you like, the next step, it's implementing the new capital rules. The key issues there are obviously to get the technicalities right, and there's nothing really quite so technical as some of those Basel capital and liquidity rules. But as well as getting them right, so they need to be phased in a way that doesn't have an adverse effect on lending to the economy. Because, in crude terms, the more capital you have to hold, the less you've got available to support lending. And so we think that what needs to take place is a clear, careful, both calibration of the new rules, but also sequencing and timetable. In no way does that mean that we're running away from change. Of course, the next stage of changes needs to be put in place. But just as with the stress testing, these things need to be done properly, and also that governments do need to be aware of the consequences of some of these things, some of these proposals on their wider economy. And we in the banking industry must be at the table for sensible, clear and coherent change.
But how do you respond to criticism overall that actually the banks haven't really understood how to take less risk? They haven't really curbed bonuses. For example, the UK banks have to meet George Osborne on Thursday to talk about extra money on the markets for the guys that need it.
Actually, you're quite right, meeting the Chancellor on Thursday. Predominantly, that discussion surrounds a number of issues, of which capital is one, and there's other topics on the agenda as well. However, as far as banks understanding the need to change, well, of course, we have already made very significant changes indeed. In the UK, we put the whole question of pay and bonuses into regulation. Last year, it applied actually for 2009, and any bonus that is paid has got to be against properly approved targets and checked by our regulator. And secondly, any bonuses has to be paid predominantly not in cash and delayed over a period of years to make sure that the performance that it rewarded was there for sensible risk-taking, because banks do have to take sensible risks, and for something that lasted over the long term.
That's all we have time for. Thank you very much. Keep it right here on Bloomberg.